Hi again, everybody. This is Jared Jester with Keller Williams Seven Hills Realty here in Cincinnati, Ohio. Welcome back. This is the second part of my Start with the End in Mind video series. This is about the termination points within the Cincinnati/Dayton area board contract to purchase. This again is about financing, but instead of it being about cash and other funding source, this is about how the loan is backed. This is about working with a lender. This is conventional FHA, VA, USDA backed loans and the rules that apply there. Again, this is a seller termination point as a one-way street. If one of these contingency periods or points is not met within the contract, then the seller does have the right to terminate. So as a buyer and a buyer's agent, you want to make sure to close those doors, right? And as a seller or a listing agent, you want to make sure you know where these exist if it's your obligation to get out of that contract. Our timelines are still of the essence, especially in this one. It's even more important because there's some very specific timeframes that need to be met within this, because those are truly the termination points. It's not who backs the loan that's the termination point. It is the timeframes attached to the financing contingency. So as you go through this piece of the process, again, you tell them, okay, is this going to be an owner-occupied property or rental, etc.? Is it going to be a conventional loan? How much is you putting down? What kind of term is it? Same with FHA, VA, and USDA. All those are fairly straightforward. Where things get a little bit different is on this page. And again, any of these, if these are not met, that's where things could terminate for a buyer if a seller chose to do so. So again, timeframes are definitely of the essence. The first is it or is it not contingent on the sale of another property for the buyer? In this market, it's a seller's market, a little bit tough to do. The buyer's market, a little bit easier for a buyer to do. Not impossible in this market though. But anyway, so you mark on there, okay, is this contingent or not contingent on the sale of a home for the buyer? Lender letter. Do you have a pre-approval letter or pre-qualification letter? There is a difference between those two. Pre-qualification, less homework done on the buyer. Pre-approval probably made it through quite a few more steps, maybe even under the underwriter's desk and beyond, and that is a more solid it's a more solid buyer, I guess you could truly say. So pre-qualification versus pre-approval. But that letter, does the agent have that letter? Is it attached to the when you send over an offer, or is it not? It should be attached. Definitely going to give you a leg up. And if it's not attached, how many days is it going to take to get that to them? And if you don't get it within that time frame again, or by the end of that, that's when a seller could terminate on that first point. The second is the intent to proceed. Now, the intent to proceed, that is basically a buyer is working with this lender. Yep, we're going down this path, and we filled out the application. We're getting them the documents they need. This is the intent. We intend to work with this lender, and that lender, that loan officer, is the one who's going to get you like an email or something like that to say, yep, we've got intent to proceed is met, and everybody's moving forward. Once that's met, boom, that door is closed and everybody's good. And again, usually I put like 7 days on that. A week is a pretty fair amount of time to make sure that that's the lender that you want to work with, etc. And if you go beyond that 7 days or any of these time frames again, there's an opportunity for that seller to terminate. But again, if they haven't terminated at the end of day 7 and you give it to them on day 9, then they can't come back on day 15 and say, you didn't do it then. Nope, that door's been closed. All right. Next is conditional approval. This is further into the process. Usually I put about 3 weeks on this one, 21 days, 22 days, whatever the case may be. The buyers are working with the bank. They're giving them any documents they need. You probably passed inspections at this point in time. Appraisal maybe has been ordered, but maybe they don't have the appraisal back yet. So that's a condition that they're waiting on, or maybe there's some other document that they're waiting on, or whatever the case is. The lender doesn't have total loan approval. Maybe it's just sitting on the underwriter's desk because that underwriter is busy and it's got its work its way to the top of the pile. But again, that loan officer needs to send that email out and say, hey, we've got conditional approval. Everything is looking good. moving forward, don't see any hiccups, etc. The final is the final loan approval. That's that clear to close. And that time frame, instead of working forward from the date of contract this way, it goes from the date of closing backwards. So if you ever get a contract and it says 29 days in that spot, that agent went the wrong direction. They thought they were moving this way forward. So I don't think you're going to have final loan approval 29 days prior to close. You probably want it 1 or 2 days prior to close. And again, all contingency, or everything's been met, the underwriter's good, and boom, this thing is moving forward. So that's really the big 4 items right there that you got to pay attention to as far as timeframes go within the contingency period of the financing, the lender-backed financing. So I hope you find this information helpful. If you ever have questions, I want to be that resource for you. I'm Jared Jester with Keller Williams Seven Hills Realty in Cincinnati, Ohio. And again, I want you to love where you live, and I really want to see you in that next video series where we cover our next termination point. Talk to you then.